Okay, we just finished. We just wrapped with Danny. Oh man, he's gonna be mad at me. We just wrapped with Donnie Connor from Smith Petrie Carr and Scott Insurance. And right out of the gate, right, you're like, oh, insurance, that's got to be pretty boring. But it was actually pretty interesting, wasn't it, Ben?
Yeah, super interesting. Covered some really cool stuff.
Yeah.
Only the two things I think that were the most interesting, obviously, cyber was one that we covered, which is very cool. Talk in detail about how much risk there is in the system, and one of the things I think that stood out for me with Donnie is that he talked about it a few times about he's a risk manager, and really that's what he's trying to do is help people with their business manage risk, whether it's cyber. The other thing that was super interesting, which I think you found as well, was we talked about ransom insurance for executives and people traveling overseas. But really, his role is to help people risk manage their business.
Yeah. And I would say the third thing that was somewhat interesting, too, is he was talking about how businesses are being insured through the pandemic as well. I thought that was interesting as well. Specifically, he talked a lot about bars and restaurants and stuff like that. So, very interesting, worth a watch. It's about an hour and 10 minutes. So, hope you stick around and watch that. All right, welcome to Think Heart. A very special episode today. This is the first time I think we've really dove into the exciting depths of insurance. I say that somewhat jokingly, but we're super excited about our special guest today, who is a bit of a character and never shies away from a good conversation. So, I think I think he's the guy that can make insurance exciting. If there's anybody else that could do it, I think it's Donnie. Right. So welcome to the show.
Yes.
Donnie Connor.
Hey, look, I'm excited to have Donnie on here. I'll do just a little brief intro and then I'll let Donnie talk a little bit about himself. But we've known each other now for since 2003. Actually. So we're going on 18 years here. We're in a rookie program, Wood Gundy together, roommates. I've known Donnie a long time. He has been a good friend, and certainly I'm excited about hearing what Donnie has to say tonight. Donnie's going to do formal intro, tell you a little bit about himself, and then I'm going to dive in deep in some questions around insurance, what it is, how it works, what insurance companies do, and we'll go from there. So Donnie, happy to have you here. Maybe tell the audience a little bit about yourself, what you do, title, and so on.
Well, thanks a lot for having me here, guys. It's great to see you again, Scott and Ben. And Ben, it's certainly been a long-term relationship. And I basically spent, the last 20 years of my life protecting the assets of Canadian families, private and public, and not-for-profit corporations. And now I find myself doing that role with Smith Petrie Carr Scott Insurance Brokers. We are based out of Ottawa, located right here in downtown Ottawa, just a few blocks from the Parliament buildings. It's a little bit more quiet here at the office as everybody's working from home, as you can imagine. Mm-hmm. And certainly a little bit more quiet downtown, just with all the federal public servants not coming into the office. But that being said, business still does move on, and insurance is definitely a key component of the business landscape. Hopefully, we haven't lost too much of your subscribers, viewers that are turning in. You said if someone can talk about themselves, it's usually me. I don't usually think that, but I think a lot of people would agree with you that I can. So, I've been with Smith Petrie here. We call it Smith Petrie for short. We just have been made an integral part of the Rogers Insurance Group of Companies, which is based out of Calgary, Alberta, with offices right across the West Coast, and ourselves and Toronto offices representing the East, and continuing to expand. So we've moved from basically a 40 to 50 employee brokerage to over 550 employees, wow, which has been a massive expansion for us. Myself and the firm are licensed across the country to provide insurance services, from a commercial standpoint, right across the country. And I've been doing it here for, we're coming up on a little over 11 years. and they've made me an employee owner of the firm, and definitely excited about the things that are moving forward, not only here within the company, but as we go through our discussion today, a lot of people, I think, when you hear insurance, you immediately want to click or move on to something different. I know I've been to a lot of charity galas, and I mentioned insurance when I was first in that networking thing, and you're right, they're out, or they've got a home and auto claim that they want to talk to you about and how horrible the experience was. So we are a full service brokerage, so that includes everything from your personal home, your auto. We do life insurance, which obviously, Ben, you would take care of. We offer group benefits, which is something that we're seeing smaller businesses really look to pick up on as they're trying to get employees to move back into the workforce. But my specialty does lie in the commercial realm. And what does that mean? I'm basically working with a large number of private companies, some publicly traded, a lot of nonprofits, and of course, being in the Canada's capital here of Ottawa, we're going to have a lot of nonprofits located here because they're at an arm's length from where their funds come from the federal government. So it's a great spot to be in. We have to be a little bit of everything to all types of clients, just given the type of diverse clientele that we have here in the city. But, it's a little bit different out west, where people might specialize in certain things such as condos or oil and gas drilling and stuff like that. Whereas here, we have to be up and knowledgeable in all of those areas, not necessarily gas drilling, because I don't think we have any of that going on here in the city that I know of anyways. Been doing that for the last 12 years, and definitely happy to be working with the clients that I am working with. But still in a growth mode of bringing on new clients as well, and happy to be here to talk to you guys about insurance and some of the obstacles and challenges and some of the interesting things that I get to come into work and deal with every day.
Definitely, yeah. I mean, I think we're going to have an interesting conversation for sure. Maybe we can just start it off and maybe tell, us a little bit difference between what the brokerage is versus like dealing with an insurance company directly. What's insurance brokerage do? Then I'll have some questions about kind of maybe how insurance works, and then we can dive into a few things. But maybe what's a brokerage do versus a standalone insurance company?
Yeah, so I think maybe what you're alluding at there, Ben, is there's a brokerage, and then there's something different out there, which is called agents. And so an agent, such as companies like Cooperators or State Farm, which has just been actually bought out by Desjardins, and there's been a lot of consolidation in the industry, as we talked about in the past. But basically an agent is someone who works directly for an insurance company and can only represent that one insurance company, and therefore can only provide the products, service, and solutions that are available under the umbrella of that one company. And we see a lot of the banks entering that realm as well. The TD, the personal. We've seen RBC Bank step up. I'm not quite sure where NSB is as well, but all the banks are certainly getting involved. The difference is once, like I said, they work for the insurance company, and they can only provide you with one solution. Myself, working as a broker of approximately the 123 companies that are writing insurance in Canada, I have access to all 123 of those companies. Now, not every one of them is going to be a perfect fit for every client that comes in the door. There may be 3 or 4 that we know are the top companies that we would like to place that company with. But the difference is I don't work for the insurance company. My allegiance lies with the client. And so my job is to represent the client to the insurance companies to place the insurance on their behalf. And so it's really key for your listeners and subscribers and viewers to know that when you're dealing with an agent, and if you fit within their risk appetite, you can really find that you're getting really competitive pricing and probably getting really good service. And a lot of times I say, if you're just looking for a better price, you're probably best to stay with them. The difference I would say with brokerages is we deal with a little bit more of the more complicated issues. And especially on the business side, when you start getting into professional liability, There's certain things that we offer that you certainly can't walk into your local bank and say, I want professional liability, errors and omissions,
Sure.
medical malpractice, cyber liability.
Yeah.
These, we deal with the more complicated issues, but certainly we are always operating in a basis of good faith with the insurance companies. But if we were dealing with a fleet of vehicles, say 30, trucks with a construction company, one truck gets in an accident, we don't necessarily have to report that to the insurance company until they decide what are they going to do. Are they going to repair the damage themselves, repair the damage of the other vehicle and pay it out of their own pocket rather than make a claim? If you're dealing with an agent, one thing to remember is as soon as you've reported that to that agent, it's going to stay on your record for 6 years as an accident, regardless of whether they actually make a payout or not. So, like I said, two different dynamics, but usually we're more involved on the more complicated side of things, where real solutions and added value needs to be brought to the table.
For sure. That's good. That's a good summary. So so insurance companies are big holders of capital. They have big pools of cash, right? So the premiums go into the insurance company, and then what do the insurance companies do with those premiums? And are they invested? What do they do with the capital? How do they put aside the money?
Yeah, so there's obviously regulations in place. Canada-wide, we've got the Insurance Bureau of Canada, the IBC, and here in Ontario, being regulated by FSRA, the Financial Services Regulatory Authority, which you'd obviously be familiar with as well. What do they do with the capital? Well, they're going to take a portion of that capital and obviously invest it in the markets. But they are very heavily restricted as to what type of investments that they are allowed to invest in. And the reason for that, of course, is what happens if there's some sort of natural disaster, like a tornado that we saw a couple of years ago here in Ottawa, or earthquakes or wildfires that we're seeing, out in BC. We need to make sure that the insurance companies are regulated in such a way that they have enough capital on hand that is very liquid, that they can make sure that they can have access to that to get it back into policyholders' hands as soon as possible, to get them back up and running, to get their operations back up and running, to get their property replaced or repaired, or to pay out claims in regards to liability or any negligence. So what that means, Ben, is very, very safe investments. We're talking GICs, bankers' acceptances. And as we see the stock market at this current point in time doing fantastic returns, the insurance companies, unfortunately, because of the handcuffs that are being put on them by the regulators, and for good reason, I would agree, have to invest in the safest investments in order to make sure that that capital is available. And given the fact that we are in a situation of historic low interest rates, it means that they are literally earning nothing on that money of those premiums that you mentioned that are coming into the pool. At the same time, not all of that money is being brought in and kept by that company. The second facet of that question is they don't take all those premiums in and they don't keep them for themselves. What they do is then take a portion of that and they purchase insurance on the insurance you purchased from them, so that they are now spreading out the risk as well. And that's called the reinsurance market. A majority of it is placed in the Cayman Islands. And just for tax purposes, that's where we're going to see a lot of the reinsurers come from. And that's where we start to see the natural disasters that are happening around the world really affect insurance rates in every country. And so it's a little bit harder to explain sometimes to clients who may live in Ottawa or somewhere else in Ontario that, because of the wildfires that are happening in BC, that's affecting your premium here. And they're saying, well, I've never made a claim in 20 years, but the insurance companies are still businesses. They're businesses like the banks. They've got shareholders that they have to answer to. And so they have to provide dividends and they have to show share capital appreciation. And that's been very tough for them to do over the last couple of years.
Yeah, that's almost the perfect storm for insurance companies, right? Low rates, natural disasters. So premiums are being squeezed a bit higher. Is that what you're saying?
I wouldn't even say squeezed a bit higher. I would say dramatically higher. And this is a tough conversation that we're having on a daily basis with other clients. And it certainly started before COVID. We already started seeing what is called or known as a hard market. Some of your clients may have heard that from their brokers, dialogue that they're having with their clients.
Yeah.
But if they haven't heard it before, a hard market is basically defined as a period of time where premiums, like you said, are being squeezed and really being escalated, anywhere between 20 and 40%, and even over 100% in some cases, depending on the business, the risks and the class of business that they are in. Certain industries are certainly being hit harder than others, but right across the board, we're definitely seeing larger premium increases, sometimes larger deductibles. Mm-hmm. Now, the only reference point that we really have as our generation and the clients who are purchasing insurance right now would be the last hard market happened between 2001 and 2003. Okay. Now, the catalyst behind that was the terrorist attacks on the Twin Towers of 9/11. And if we look back at the insurance policies that were written at that time, there was a war exclusion that was put into wordings of all policies, but there was not a terrorism exclusion, which is now standard today. Okay. So because that wasn't in the policies at that time, the insurance companies were made to pay out for not only the property losses of those two towers, the lives that were lost, the damage and the collateral damage that happened there and around the world. It really did have ripple effects through the entire industry. Sure. The good news is that it only lasted for 2 years. We're already about 2 years into this current hard market. Yeah. Now we've hit a pandemic that nobody has seen anything like since 1918, and now it is adding and fueling to that hard market. Yeah. What we're seeing is higher premiums, as we already talked about, but along with that, insurers are really reducing their risk appetite of what they're willing to take on. Even to the point of issuing non-renewals. And I mean non-renewals for businesses that have been operating at a profit, haven't had a claim in 20 years, businesses that you would think that insurers would really want. Sure. They're really scrutinizing and basically re-underwriting every single business this year on the renewal. So you can imagine the amount of questions that are being asked of clients, and they're going, why do I have to answer this? I haven't had to answer this in the last number of years. Yeah. Us as brokers, we're having to go out and try and get terms from other insurers. Yep. And with everybody, working from home and trying to be a spouse, a parent, a teacher, an employee, and everything, a counselor, and all at one, and their desk piling up with submissions, we're seeing the turnaround time from quotes, which used to happen, within about 3 to 4 business days for a new business application. Now coming up to, close to 4 weeks, 3 to 4 weeks. So we really, as a broker or a broker that's doing a great job for their clients, has to really make sure that they're getting out and not just submitting an application to the insurance company, but even picking up the phone and talking to the underwriter and letting them know that there's a great new business that's going to be hitting their desk this afternoon. Yeah. And it's just a lot more, definitely a lot more work on the broker's end, but a lot more work on the client's end as well in making sure that we're providing the right information. As you know, a lot, things have changed, Ben. Yeah. A lot of companies have pivoted their operations, and sometimes the last thing they think about is to call their insurance broker and say, am I covered for this? For example, we saw some local breweries step in and say, you know what, we're going to stop producing beer or alcohol, and we're going to start making hand sanitizer. Sure. Well, that's a drastic shift in risk. And thankfully, the insurance companies that I worked with were on board as long as we were able to explain that, this is what they're doing and it's for a short period of time. And this is when we expect to shift back. But certainly, I think the main message to get across to clients is things have definitely changed. Yeah, no kidding. Yeah, I mean, obviously, I think about our business and what I do here. Obviously, I'm sure like cyber's been a big one, cybersecurity issues, and I think that'll continue to be a major one. I mean, you work with a lot of great businesses. Maybe you can take us through a couple of examples. Maybe a basic one like a restaurant, and then maybe we can walk through some more of the interesting ones.
maybe you can tell us about a restaurant, then I will maybe ask you about cyber, but let's maybe take me through an example. How does it work? What's the process like? What's the time like? What are people looking for? What do the insurance companies want?
Yeah, so I think restaurants and pubs and bars and whatnot, they're a real interesting example to talk about because you mentioned the perfect storm earlier. So there was a program that was offered by AIG. It was a hospitality program. And as soon as COVID hit in March, and we saw all of these hospitality providers have to literally shutter their doors based on in Ontario anyways, and across the country with different restrictions, we really saw a lot of fear on the insurance companies' behalf. So we had one program that was in place that was insuring tens of thousands of restaurants across the country. That was through AIG. It had been a long-standing insurer, and they basically put out a polite letter saying, you know what, we've done well by you by providing so many discounts, but we're closing down the program. We just have too much at risk. And, obviously there's some ideas out there. If restaurants or any business for that matter are closed, there's certainly worries about, theft, people breaking in to get access to alcohol, cash, or whatnot, which may be on hand. Vandalism, at night when nobody's around. Of course, fire, and certainly the moral hazard of, I'm not suggesting that any clients would want to do this, but I think insurers were a little worried that we could start to see more fires that, just start to happen. And, take that insurance back and move into a different line of business going forward. But more importantly is water damage. Water damage actually far outweighs any of the costs and claims than fire. And that can be just the sheer fact that nobody's visiting the premises for up to 7 days because they're closed. So if we have and they're turning down the heat to save on costs, and some of them are disconnecting alarms to save on those monthly costs. So, we have a pipe that bursts at 2 a.m., it could be 2 to 3 days before someone goes in to pick up the mail and take care of some office and administrative work before that loss is discovered. And of course, if it was discovered, as soon as it happened, it's going to be mitigated right away. You can only imagine how much greater the damage is going to be if it's been going on for 24, 48, 72 hours. From a submission standpoint, I can tell you once AIG pulled out of the market, a lot of other insurers basically said, we're not interested in writing hospitality as well. A lot of them weren't quite sure how the government was going to react to close people in a closed setting, and there could be transmission of COVID. And even though there was an exclusion already usually in place on 99.9% of these policies, in regards to business interruption as a relation to a communicable disease. They were just worried that there still could be claims, and with claims, even if they're unfounded, there's going to be legal costs on behalf of the insurance company to have to defend those. But moving forward, we're 16, 17 months into this. So if a restaurant was to approach me today, we do have markets that are willing to write it, and some of them were just kind of looking to wait out the storm and see how things are going. We were talking, before we went on about, vaccines and doses and stage 3, looking to open tomorrow in Ontario. So these are great things for these businesses, and the ones that have been able to really weather the storm. We're going to be able to show that not only have they made it through some of the toughest times, if not in history for their business, but we're going to see, growth and probably a huge expansion as people go out there and, revenge spend or whatnot as they're looking to, use some of those funds that they've been able to save over the course of time. I think there's going to be obviously a change. Uber Eats and DoorDash and stuff like that are going to stick around. But to get back to your question of what we're going to need, we really like to look at what the division between alcohol and food sales are going to be. What condition, and obviously the higher the alcohol sales, the higher the premium, the more the concern about liquor liability. So, we don't like to see anything more usually than 40% in liquor sales compared to 60% in food sales. on a submission going to an underwriter. We might get closer to a 50-50 if we're talking about a very high-end steakhouse, Italian house type of restaurant where they're selling very expensive bottles of wine.
Right.
We can start to justify those things.
Gotcha.
Secondly, really what's important is the condition of the building and the main components of that building. The main components would be the roofing, the plumbing, the heating, and the electrical. When were they last updated? When were the extinguishing systems last updated? When were the hoods that collect the grease and the grease traps? Have those maintenance contracts stayed in place throughout COVID, or were they canceled to save on money?
Sure.
And when's your last certificate? And can we get a copy of that to show to the underwriters that you've done everything you need to do to make sure that we're not going to run into a grease fire as soon as you start to really try and pump up the volume in your restaurant and start going full bore ahead. So those are some of the ideas of what we've been looking at on a restaurant type of situation. At the end of the day, gross revenues, the split between food and alcohol, the building that they're in, the premises. And what I even like to do nowadays that wasn't used in the past is get a collection of their financials and basically say, here's where their financials were 2 years ago. Here's they went through COVID. Here's what they did during COVID, and here's where they are moving forward and what their projections are. And that kind of gives the underwriters a lot more comfortability around those moral hazards that we talked about, but also that they're not cutting back on all of their expenses in the maintenance of the premises that they're in that could obviously lead to claims.
Yeah, for sure. So did the province step in at all and help on an insurance side, or was it just kind of left to, you got your business checks from the government and you pay your responsibilities there? Did the government step in at all, or just with the financials?
Yeah, so the government hasn't stepped in, at all in regards to, helping out on the insurance side of things. However, myself personally as a broker, I do have a number of restaurants and pubs that are kind of best in class. And so what I did is I would advocate on their behalf. I would ask for their financials, and I would basically go to the underwriters and say, look, this is the premium that they paid last year. This is the premium they're paying this year. This is how many months they've been open. And here's a copy of their financials to really show you. We're not just writing numbers down, on a piece of paper and sending it in and saying we made about this money. About this money. They're interim financials and sometimes, audited financials, and that we can send in to really verify that, look, this business has suffered. Because the business has been shuttered, although the liability has increased on the side of someone not being there every day, and like I talked about the fire, theft, water damage issue, we also did see a reduction in liability on the alcohol side. So can you do what you can to help us with some what I call COVID relief or rebates? But that really comes down to the broker working with their client to secure this information and then going back to the insurance company and really advocating on their behalf. Some companies did come out with some small business programs, but you would see from across the country that literally those funds would be eaten up within 24 hours with tens of thousands of submissions, requesting money.
Of course.
There were some other companies out there, one I'm happy to mention, which is Intact, the largest insurance company in Canada, which actually really stepped up well to the plate, not just for restaurants, but for all small businesses. Your Main Street type of businesses with premiums. They started with premiums below $5,000 to start. A few weeks later, they notched it up to premiums below $10,000. And as of last check, I believe it's 15 or 20,000. And so, these went a long ways to help out, not only restaurants, fitness facilities, and salons, which were hit very hard, but, your bread shop, your cupcake shop, all these other places that make, each of our communities unique. And so I was really impressed with the way they stepped up and did that.
Awesome.
But once again, each insurance company had a different way of handling it. And as a broker, we had to have the knowledge to make sure that we were communicating that to our clients as to how we best advocate on their behalf.
Yeah, for sure. Well, that's awesome. That's I'm sure the clients appreciated that and your efforts to get that done. That's great. So I know you do some interesting stuff. Cyber is certainly something that I think is going to be, already is a huge deal. I know it goes extremely unreported. You probably see a lot of it, but I know cyber attacks happen every day. Payouts happen every day. I don't know from insurance, which you'll tell me, but I know that a lot of the companies want to kind of sweep it under the rug and make sure people don't know they're a hack. So maybe you can tell us a little bit about cyber insurance, how it works, how much interest it's getting now, and a little bit about that. Sound good?
Yeah, so there's a couple of major, I'd probably say four major players around North America and across in Europe as well, who are the top providers of cybersecurity insurance policies that I would at least be recommending to my clients. What we did see in the past was a lot of companies start to offer what I would like to call cyber light, which is little limits of $25,000, for a breach and for notification expenses or for monitoring someone's credit or whatnot if something had happened.
Sure.
And maybe if there were some fines or regulations from the privacy commissioner. If it was indeed reported to the privacy commissioner, which by law was supposed to be done, but I know a lot goes unreported still.
Yes.
2 years ago, I think I started a real heavy campaign on LinkedIn and was literally posting basically every day about the need for cyber insurance, and not just the extensions that were offered under your standard, what we call package policies for small businesses, small, medium enterprises. So we're talking, policies up to maybe $50,000 or $75,000 in premium and as low as $1,000 in premium.
Okay.
They would have these little attachments on there, but really it didn't have the attachments for the stuff that was happening and the stuff that we're seeing in the media each and every day, which is ransomware attacks. It's the biggest thing that's being talked about. You couple that with what we're hearing about with Bitcoin, and Bitcoin is the preferred method that these hackers, attackers, threat actors tend to be requesting their payments to be made in. We hear about the JBS meats, the Colonial Pipeline that caused gas spikes right across the East Coast. It went from literally nobody saying I have a real cyber risk. It's only the big guys who are being targeted.
Sure.
Then we started to see a stream, about a year and a half ago, where the big universities and whatnot didn't have policies, but had all of this lab data that their doctors and researchers had worked on for their whole careers. Now being encrypted. So to kind of take it one step back, basically how this works and what the bad actors are doing. I think hackers is a little bit of an old term, that we still use, but we call them threat actors or bad actors out in the marketplace.
Yeah.
And when we really switched to this work from home model, we saw that businesses really lost the strength of their IT systems. And as we go back to what I was saying earlier about employees working from home, they're trying to be a parent, a teacher, daycare provider, an entertainer, and an employee all in the same day. We're being pulled in a lot of different directions. And it's not hard for a hacker to send out an email that looks very official. It could say that your Amazon package is on the way, and please click here for tracking information. Please click here for your Canada Post notification. Please click here to see the latest COVID-19 numbers in your area code K2 whatever in Ottawa. It just takes one slip of the finger and not looking at that email and seeing and they look legitimate. They do a very good job of being legitimate, and you click on it and it may take you right to Amazon's webpage and say, okay, and you go, well, what's going on? I didn't get my tracking number. You're going to close the window and kind of forget about it.
Sure.
And that's their way of kind of opening up that back door and getting into your system. And so the interesting thing is the attackers used to just get in, lock down your information. You would open up your computer to log in the morning, and it would say, you've been hacked. You have 24 hours to provide us with a certain amount of Bitcoin. It could be as low as sometimes they were looking for just $500, and they were looking just to hack people's laptops. But when we switched to this work from home model, now they were getting into company systems, and they really stepped up their game, so to speak, where they would infiltrate the system. They would usually spend about 6 months going around in the servers and gathering up that information.
Yeah.
Then once they had all the information gathered, and on top of that, they would even search the words in the system, cyber insurance or insurance policies, as most policies are delivered electronically now. And if they saw that there was a policy, well, now they know that they can even ask for more money.
How much? Yeah.
So it was really, you got to kind of tip your cap. It's a cat and mouse game, and they were definitely 2 steps ahead. And now we've got the cyber insurers, stepping up to do more things and be more proactive. But yeah, they would encrypt your system, encrypt your information. And the great thing is, I guess, great, I say in quotations, but there is honor among thieves. They wouldn't want to ruin their reputation with the rest of the bad actor or hacker industry. And so there was like a 99.9 success rate that if you did pay a ransom, you got your encryption key and you got your information back and you were ready to go. So a lot of companies weren't prepared for that, and a lot of companies paid a lot of money to get their systems back online. The great thing about a cyber insurance policy is they'll have coverage for your ransomware, or even if a bad actor says, I will lock down your systems and tries to extort Bitcoin, a payment through Bitcoin. And, they've got they've got the proper PR teams in place, the proper IT crisis management teams in place that can come in there 24/7, work with the system, see how much of the information has been encrypted, what type of encryption software they're using, how they can, do they have to pay the ransom? Do they not have to pay the ransom? That's 100% up to the client. But the money is there and is available through the cyber policy. It's up to the client to decide in the end what they want to do. And in the end, there might be so much damage to a company's systems that new computers, new servers and whatnot have to be put in place, not to mention all the data reentry that has to be done. And those back doors and loopholes that they use to get in, well, obviously, we have to make sure that those are closed off as well. So you said there's a lot of interesting stories, and there's a lot that goes unreported. The ones that do go reported are the people with cyber insurance policies. At last check, which was about 8 weeks ago, claims year over year were over 1,100% in 1 year. And 2 years ago, you could have got a $1 million cyber insurance policy to cover your company as a standalone insurance policy. For as low as $880. Wow. And people were balking at that. And I mean, accounting firms, legal firms, investment firms, everybody said our IT, like we pay a lot of money for our IT. We're well protected. And it's kind of really, in the last 24 months, it's switched where even the IT providers who are great and absolutely fantastic at what they do, they're recognizing and saying, hey, we're doing the best we can, but we can't stop every threat.
No, for sure.
We do recommend that you purchase a cyber insurance policy just so you have that peace of mind. And it's one more backstop and great risk mitigation tool that you can use to protect yourself. So we're hearing about the big names in the media. We're not hearing about the small and medium enterprises. And that's where I'm seeing them come in. And we've had some big claims that have certainly happened, and clients are just so thankful that they have this coverage in place and that they've been able to get themselves back up and running and avoid these things such as fines, penalties, and or have the money to pay to notify their customers and to have PR teams on hand so that there isn't any devaluation in the brand of the company or loss of trust in the company that you're dealing with. And you can imagine, accounting firm or a law firm being hit, that could be really detrimental and almost the end of their business because you're saying, if my information is out there in the public because I chose to do business with you, I think I'm going to take my business elsewhere going forward. And so where was it in the past? I really couldn't sell it no matter how much people listen to me. I get literally 3 to 4 calls or emails a week on it now saying, hey, do we have this? And if not, what do we need to get it put in place?
Yeah, for sure. So the costs have gone up a lot. I mean, it's the old companies, right? It's the legacy systems that have been pieced together that have all these holes. I mean, the banks lose data all the time, right? They've all been fined I mean, BMO lost a huge amount of clients' information.
Careful,
So
Ben.
there's
Careful.
holes in the
Careful there.
system. So how much would the costs have gone up? Because you say 2 years ago, $1 million, $800. Like how dramatically has that changed?
You know what? It's a great question. I get the question all the time is, how much would X amount of
Sure.
insurance
Yeah.
cost?
Yeah.
And really, there is no sliding scale. It does not move in a linear fashion.
Yeah.
What I can say is when I work with my customers and clients who are requesting this coverage is, one, we complete an application, but we go over and above and really explain what type of security defenses do you have in place? What type of password implementations have you used? Do you use multi-factor authentication,
Yeah.
which is a little bit more of a hassle, a little bit more expensive?
Totally.
And certainly for small companies, they're saying,
Yeah.
well, no, we don't have that in place,
Yeah.
and it's going to cost us a few $1,000s to set it up, and we've got to train our employees.
Yeah.
But at the end of the day, these are the type of proactive measures that cyber insurers are looking for before they're willing to offer coverage.
Sure.
In some cases, they won't offer coverage. So
Yeah.
I can give you an example. A home builder of mine that does $37 million last year. Had a big spike in revenues, obviously, because they're building a ton of homes because everybody's moving out moving everywhere, right?
Yes.
And moving to bigger homes and working from home and needing office space and whatnot. This is an industry that you would think, is in construction.
Yeah.
And they wouldn't normally think about cyber insurance. And we were able to put a policy in place for them that was a little over $5,000 for a full $2 million limit with a $15,000 deductible. Now, the interesting thing is, based on the revenues, this client did come back to us and said, can we look at higher deductibles such as $25,000, $50,000? We would be happy to get that price down and absorb that first $50,000 of loss.
Yeah.
And the interesting thing is the cyber insurance company came back with quotes, and the difference between the $15,000 deductible and the $50,000 deductible was $217. So
Wow.
obviously, it was a no-brainer to say, you know what, pick up the policy with the $15,000 deductible. It's a little over $5,000. You're never going to get your money back when there's an incident by having a $50,000 deductible. It just doesn't make sense from a risk-reward perspective. However, there was an article that was released just yesterday saying get ready for rates to double in the next year just because of the number of claims. And so these are the types of things, as a broker that I'm constantly trying to keep my clients aware of. And it's not in an issue of trying to scare them or whatnot. I'm trying to make sure that they are budgeting properly, and I'm providing the value add services that they need in order to make sure that their company is protected at the end of the day, but also that it's not a shock for them when they see that price is going to come in. But if I'm doing that now at the 6-month mark, by the time we get there in a year, I think I don't have a crystal ball, but we can only imagine what we're going to see in the headlines going forward. And they're going to go, that makes sense that the price has gone up. So.
Yeah, I mean, the bad actors continue to win because the technology hasn't caught up yet. So hopefully you can get the technology to catch up a little bit too, which will help the insurance companies.
You'd mentioned the banks there, and I'm just mentioning how sophisticated the attacks are becoming, that they're actually starting to specifically target certain sectors because they know it's more profitable. And within the last, I want to say 6 months, we've had 2 major insurance companies be shut down by cyber attacks.
Wow.
And so, it's out there in the news. You can go out there and Google and find out who they were. But certainly it put a stop to our operations because we're trying to send in quotes or we've got clients who need renewal terms. And they're saying we had to shut down our systems to contain everything because we're under attack. So we're not opening things up. And if you can't tell me, this is a major multi-billion-dollar company, that's not causing them, millions, if not tens of millions of dollars per day, per week while they're shut down. It's a major, major, not just inconvenience, but, hit to their bottom line. So these actors are getting very, very sophisticated, and we're only going to see more of this going forward. So it's not a matter of if, it's a matter of when.
True. I think they should be asking for Ethereum, though, not Bitcoin anymore. Anyways, we'll carry that on for another conversation.
Is that a personal plug? I will tell you that when the FBI on the Colonial Pipeline hack, something that I found interesting, the FBI did come out and say that they retrieved a portion of the money by hacking the hacker's wallet, which I believe was Revel or REvil, which is based out of Russia. One of the very, very successful and well-known cyber attackers out there in the industry. And they have started to look for other currencies, which once again just goes to show, most of my clients and most of my friends likely wouldn't know necessarily how to go out and start a wallet, buy Bitcoin or buy Ethereum or buy Cardano or any of these coins in order to pay a ransom. And the interesting thing is that these companies, although they are illegal, have literally become almost as good as legitimate e-commerce companies, where they have a 9-to-5 customer service line where you can call in, you can talk to someone, you can negotiate the payment, they will help you set up a wallet. And even so far as, reading one story in the Wall Street Journal from one negotiator where he was trying to get this wrapped up, on a Friday afternoon to get all of his clients' information back and get that encryption key. And the person on the other line said, "Sorry, sir, we close at 4. We're closed over the weekend, and we can resume negotiations on Monday." And it was just mind-blowing that, these companies were set up with such, fantastic customer service, providing this great customer service for a ransom and not trying to nail it down and get that payment ASAP. It was like they knew the payment was coming, and they didn't mind waiting till Monday morning at 9 a.m. to pick up conversations. So it's a new world out there. Things have definitely changed.
That's crazy.
Yeah. That's good. I'll probably leave that at for now, but super interesting. Thank you. One of the other ones that we've talked about a bit on and off over the years is the ransom insurance that you do for executives. So I know these are a little bit different and strange, but I think people don't know a lot about these ones. So maybe you can tell me a little bit about how those things work. Certainly, I know a little bit. I've followed some executives that have been kidnapped in places that I've followed in the past, and I know it's something that you've done and we've talked about. So maybe you can tell us a little bit about how those work. Obviously, I would think that costs have gone down as executives have stopped traveling, but maybe not. Maybe tell me, Donnie.
So we certainly really haven't seen where the costs are going to be because we basically lapsed all the policies as international travel came to a halt. But the people that we see buying these policies aren't necessarily the rich and wealthy that you would think. The executives from publicly traded companies that make $20 to $50 million a year. That we're used to seeing, on TV with, what's that guy's name? I forget it right now. But anyway, he's got that ransom show called Ransom.
Yes.
And he's a hostage negotiator.
Yes.
But anyway, to get back to the insurance side of things, this is a policy that, I find very interesting. It's very secretive in a sense that we can put it in place, we can issue it. We're under very strict non-disclosure agreements. We must lock all the policies or have them stored online, and especially encrypted, password encrypted folder. Obviously, for the reason that if any of that information was to be leaked, they just automatically become a target.
Sure.
So what a kidnap and ransom policy is put in place for is to pay for the extraction of somebody who may be kidnapped, who is kidnapped or held hostage while they are on business duties in a foreign country. And as we see, it's not hard to watch the nightly news, the number of protests and the inequalities between, the rich and the poor in countries right across, whether it's in Europe or South America, around the world. It's making traveling for these executives much more dangerous. And so the one thing I reiterate is, as much as it's the high-level executives that are getting this policy put in place because they are very key to your organization continuing to run. And it's also, the small nonprofits that are purchasing them for their executive directors that are going across and sending even some employees over to, let's say, Haiti and other areas of South America, where they're going to be more at risk, and making sure that they are protected. And the reason for doing that is because if something should happen to them while they're away on company business, that can obviously come back against the company and ultimately the board of directors for not making sure that they provided a safe work place and employment for their employees while they were away performing company duties. So, these policies come with a lot of bells and whistles. They are literally, the type of companies and the training that I've gone through and the stuff I've seen, literally the SEAL Team 7s, 8s, 9s, 10s or whatnot, that, they come in with a bag of money, they make the drop. They're willing to pay the ransom. They will do whatever needs to be done. They will try and negotiate it down, but they are not going to negotiate it to a point that it causes the loss of someone's life. Their job is to pay the ransom and get those people home. And the reason why I find it so interesting, and probably why some of your viewers will as well, is this stuff is going on. It just isn't reported as heavily. And the reason why it's not reported is the insurance companies obviously don't want to perpetuate this cycle of kidnappings happening, where they're just literally kidnapping anybody and everyone who doesn't seem to fit the mold of someone who's a local in that area, and asking them if they have that card in their back pocket with the 1-800 number on it, so that they can call and start the hostage negotiation process. So all of those numbers are kept ultra sealed and never released. But I can tell you from experience, they go in there, they do the job that they're supposed to do, and they pay that ransom and get them back. And then, of course, like I mentioned, some bells and whistles. They'll pay for any type of PTSD, rehabilitation, counseling. It's obviously a very stressful situation. Whether there's vacation time that's needed off for that individual to spend more time with the family, have a replacement worker maybe take on some of their duties. There's a whole lot that goes into these policies other than just the ransom payment and the ex-military forces present that'll go in as a private contractor and company and do the extraction. They're going to do a lot of the stuff around it to make sure that person isn't just brought back home safe, but they're brought back whole. From my perspective, I think it's really neat when we put these policies in place, and remarkably, they're really not that expensive. With one nonprofit organization that I'm working with, we're talking, we get their itinerary for the year, making 6 trips. We evaluate the risk based on, what countries they're going to and what level of alert they're currently in the geopolitical scheme of things. But I've seen policies as cheap as $2,500. So, and we're talking for $2 million policy limits. If someone was to be kidnapped, and I think a lot of hostages would be happy to walk away with $250,000 or $500,000 in that situation. So thanks for bringing that up. It's a neat topic. Certainly a neat thing I do for a lot of clients, but certainly something that we keep very secretive because it is very important coverage for our clients.
See, Ben, I was right. Donnie is the guy to make insurance exciting again.
Right?
Hey, it's interesting.
I told you.
Hopefully they snuck along this long to get to that little keynote. Or
we're gonna put this right at the beginning.
That one up to the first line.
We're gonna cut this part out, put it right at the beginning. It's like a teaser.
Can chop it up a little bit. Listen, Donnie, what's new on the insurance side? Obviously we talked about a lot of things here, and I'm sure we can continue to talk about a lot more. But what's new that's been changing that you think's kind of unique and interesting that we haven't covered yet? I got a few more questions, but I just thought I'd throw it to you, because you work in it every day. What is there anything interesting and new that's kind of changing that you'd like to kind of mention right now?
Yeah, I think basically, insurance is a very old industry, as is banking. Yeah. And I think, from a new and interesting, standpoint, other than cyber, and actually directors and officers has been a very, very a tough placement as well. Okay. Obviously, directors and officers' policy is to protect the directors and officers of a company. Yeah. Should they be found to, mismanaged or some sort of harassment that they didn't operate in. And we have just seen a flurry of claims. Yeah. I used to call D&O insurance, which is what we call it for short. Yeah. I used to call this the most boring form of insurance. Like, you barely had to fill out an application and submit some financials, and you got a quote back in like 24 hours. And, the pricing was, very competitive. Yeah. The questions that underwriters are asking now about, the layoffs, how many layoffs happened during COVID? Yeah. How many terminations happened? Yeah. Did you seek legal counsel before you made those terminations? We want to see updated financials and interim financials to see how you're doing and coping through this. Yeah. And we want to see what your projections are for moving forward. So just the amount of underwriting questions that are coming back is just, clients are going, I've never been asked this before. Yeah. And I'm going, get used to it. What's really changing is the nature of risk. And that is, insurance companies have lost a lot of money in the past. Yeah. And they are, publicly traded companies, and they need to get back to profitability. In order to do that, they've got to clean up their books of business and really be sure of what they're writing, and not just kind of doing what we saw in the past, where interest rates were a little bit higher, what we call cash flow underwriting, where the cash is just coming in and they keep investing it, and the cycle continues. Now, over the last 5 years, we've seen the claims step in. And the cash level obviously go down with the amount, the capacity that they're doing. Obviously, rates are going up. So D&O is certainly something that we've seen as new, as being a very, very tough and hard market to place. Seeing a lot of non-renewals. And this really can be attributed to, definitely through COVID, like I said, layoffs, terminations, but certainly societal factors as well. Yeah. We've got issues like the hashtag BLM, hashtag BIPOC. Yeah. We're talking about having proper diversification on boards of directors. The Me Too movement as well, which really got things started from that standpoint around harassment. Yeah. And we're all of a sudden, all these claims were coming up, causing insurance companies to pay out massive amounts in legal fees to try to defend their clients. Yeah. But when they were negligent and they didn't, employ the proper, business practices and handle these issues like they should have, the insurance companies were there to pay out to the plaintiffs. Yeah. And so we've just seen so many claims in that side of things that basically companies are being very, very restrictive on what they will accept. Yeah. And so the new things are, if you used to have a $2 million limit, they're now just immediately dropping it to $1 million. Okay. So there's less coverage being offered. Yeah. We're also seeing costs used to be, almost automatically exclusive, meaning legal fees and other costs related to defending a claim used to be exclusive of the $1 million or $2 million limit that you had on your D&O policy. What we're seeing now is they're saying, not only have we dropped your limit, we're going to put those costs inclusive. So, you've got $600,000 in legal costs, for a claim that's going on over a number of years that maybe has a number of plaintiffs. And all of a sudden there's only $400,000 left to pay out. And that's where the insurance policy is going to stop. Where is the rest of that money going to come from? Is the organization going to be able to survive that hit? And how are the directors going to be protected And, as you know, when you get up to the status of really being, on a board of directors of a large company, you've usually hit some pretty big milestones, in your life, and along with those milestones comes some pretty good compensation. So, now you're putting your family's RSP, your daughter's RESP, you're putting your camper trailer, your cottage, and your dog, your house. So you're putting everything really on the line.
Risk,
And so what we're seeing now is companies that maybe were smaller and didn't have that coverage before, or for whatever reason may have missed it and are calling into us saying, how do we go about doing this? Because they have a director on the board who says, I will not join, I will not start participating until I see a policy in place. Because there's no such thing as a good volunteer clause that excludes you from being pulled into a claim.
Yeah, so I did a couple of years on a charity board, and we actually had to fold the charity. So I have some battle scars of remembering that time, going through that. That very, very interesting.
I had to add a policy like that after an incident as well, which was, you never think it was such a small thing, and it ended up costing us a lot of money. The company I was with before, which was my own company, right? Because we didn't have any kind of insurance to help us with that. So it was very interesting. But then after that happened, obviously we went and got insurance for it. So very interesting. I got a quick question.
Yeah, sir. Good.
Yeah. You mentioned like a lot of consolidation in the industry. I mean, you've been in the industry now for a while. You've seen the role of the broker change probably over the course of your career. How do you think what are the major things that you've seen change, and what do you think the role of the insurance broker will be in the future?
Yeah, the consolidation has been massive, and we're seeing consolidation not only at the high level of insurance companies purchasing other insurance companies in multi-billion-dollar deals, but we're also seeing consolidation where insurance companies are purchasing brokerages. And in that space, I would use Intact as a company that I use and purchase insurance through for a lot of my clients. However, they also have their own brand it's a quasi-brokerage, quasi-agency that operates under the name BrokerLink. And so they've been coming in and buying up independent brokerages and turning them into their own kind of frontline service to put their own brand in front of the client. Now they can, sell some other policies, but obviously, the recommended way of going forward is if you're a BrokerLink broker, we want to see, some Intact policies, being put on the books. So there's kind of some inner competition, that we're starting to see there. From the personal line side of things, we're definitely seeing things go digital. And so, it's making it easier for people to, purchase insurance right from their smartphone or log onto their laptop. And they can get a policy within 15 minutes. And, we're seeing a lot of the younger generation want that type of thing for when they buy their new house, if they can afford one in today's market, or, even, tenants insurance for apartment, or, your auto insurance. And, that certainly is a threat to the personal lines portion of business that all brokerages rely on as a line of their profitability. And it's certainly coming in and eating a big chunk of that profitability because it is so easy to use and to purchase a policy. On the flip side of that, when you're dealing with that, you have to understand, do you understand really what you're purchasing? And how are you going to be treated in the event of a claim? Are you going to be bounced around between, a few different people, but you're calling the same 1-800 number and re-explaining your story over and over? Whereas if you're with a dedicated broker, they're going to handle that process, from start when they have the claim happen and kind of walk you through it and make sure that, they're the ones that, have all the information and are sending it out to the relative parties. But I do see that as a huge change and a huge threat to the insurance industry. On my side, where I specialize in, on the commercial and business side, where I focus really on providing risk management solutions to my clients at a high level basis. I have dealt with clients that, in the past that paid as little as $1,000 a year, and now dealing with clients who pay $250,000 to $350,000 a year in premiums. So, your role as a broker really changes. And are those clients who are at that level going to be purchasing their insurance online anytime soon? I don't think so. And they just don't, they're not able to provide the solutions that we provide. So things are going to continue to move more and more, technology advance. And like I said, insurance is kind of one of the last movers, but they will continue to move. Yeah. And I think as we've gone through COVID, it's going to make all of our industries really start to speed up the adoption of technology, because our customers are wanting it and are needing it, because they don't necessarily have the ability to get into that face-to-face space. Yeah. And, that's why we're having this call, online from, 3 different locations, which is great. Yeah. It's not often that I get a chance to sit down with both of you, but here we are having this conversation. So, on the personal line side, I definitely see it being a disruptor. On the commercial line side, I think it's going to be a long ways away, just because the knowledge and advice and the value add that really comes from dealing with a professional who knows what they're doing, to bring in those extra value adds, such as, if we want to talk about some topical things in the news, a crane collapses in Vancouver and, causes a number of deaths. Not only does an insurance policy need to step up, but that broker needs to set up that client with a PR firm to make sure that they're getting out there and handling and managing that story properly, to once again protect their brand, and to make sure that they're paying respect for the negligence that happened. And I'm sure, it is an accident, and these accidents do happen, and it certainly wasn't meant to happen. But, if a company wants to continue on its operations and have faith in the communities that it's operating in, they need to make sure that they have someone there to help them get their story out. And that has nothing to do with insurance. Yeah. That is something where I will have them sit down in a meeting, and we will not talk about if a claim happens. I basically start my clients out with when. Yeah. And so one of the things I do is we'll sit down in a meeting, and I'll introduce them to a third party, has no relation to our firm, who is a forensic auditor. This is the person who's going to do all of the financial work to determine how much revenue you have lost over the last number of months, years, whatever it takes to get your business back up and running. Yeah. And with the current, labor shortages and material shortages and permits it takes to get issued, it could be a long time. So I introduce them to that third party and say, when the claim happens, don't worry, we've already assigned this person who's going to be handling that portion of it. Next one is introducing them to the PR firm, and this is going to be the PR firm that's going to be helping you keep your brand reputation, and really being able to describe to the media exactly what happened, how it happened, and why it happened, and what are the things that your company is doing to make sure that this doesn't happen again, and what risk mitigation factors you're going to be putting in place. So those are the types of things where I see things moving forward, where I'm not just talking to my clients about my portion, which is insurance. I'm making sure that I'm talking to my clients about this is how things are going to happen when a claim happens. Yeah. And therefore, you're not, it's still going to be a very shocking and very traumatic event, regardless of what type of claim it is. It's going to hit you, from the side, and you're not going to expect it. But you're going to have a little bit more comfort knowing that, I'm basically one phone call away, and we're going to have an action plan that's ready to be put in place. Similar to what companies are asking about, what's your action plan now for COVID or other catastrophes that may happen down the road. So that's my plan of helping clients going forward, is making sure that they're ready for when that event occurs.
Nice. Listen, Donnie, this has been awesome. I know you got a team that works for you and supports you. If people want to reach out to you, how should they connect with you? Do they reach out to your team? Do they reach out to you directly? What's kind of that course of action, how people connect?
Yeah, I want to give a huge shout out to my team, actually. They are fantastic. I've got 5 account managers that work with me, and 1 technical assistant. And we've got a great, personal line side team, and obviously, life and group benefits as well. Really, it comes down to everybody working together. So first and foremost, I wouldn't be able to even have the time to, spend an hour or so having this chat if I didn't have a team to help me, with the certificates, answering questions. They're all registered. They're all licensed. To be able to handle those types of things, because at the end of the day, my job is to either be here on the screen, which is our kind of our new way of doing business, and talking with clients through these video calls. But I really do love and have started to thankfully been able to do face-to-face meetings, which is taking me out of the office. And so when I'm out of the office and I'm not right there to pick up the phone, there's always somebody else to back me up. And you know what?
Awesome.
I've got account managers that are, I'm not going to date them. They're in their age, so to speak.
Yeah.
Let me just say they have a wealth of experience. And have been in the industry much longer than I have, and I'm learning from them each and every day.
Awesome.
And I've got a couple of account managers that are younger as well, and just super efficient and bringing a whole new perspective as well. So to get back to answer your question, after giving those shout outs to the heroes of my team, certainly they can get my email, my direct email from you. And as a thank you for letting me talk about the thing that I love doing with my career, which is risk management. I'm certainly happy to do like a risk management audit for any of your clients that want to reach out.
Awesome.
I don't think it's beneficial to do it maybe 6 months until 6 months before your renewal. But certainly all they got to do is shoot me a line and say that they were listening to Scott and Ben Hart and Scott, and you can give them your promo code or whatever, and I'll make sure that we at least help them out and put them in the right direction. Not every client is going to be a right fit,
of course,
but if they're not a right fit for us, we're going to always make sure that we get them the answers that they need and point them in the right direction. And that's what's gotten us to the top. You type insurance in Ottawa, Smith Petrie Carr Scott comes up first. Because of our Google reviews, and I've never heard of any insurance companies or brokerages that get as many Google reviews and 5-star reviews as we do. It actually surprises me that people are as revved up about insurance as I am. So again, definitely happy to answer any questions and to help out anyone who has any questions or needs some just a guidance and advice. So I'll leave that to you to put that out to your subscribers.
Fantastic. Donnie, it's been awesome. Always interesting. Always give me some food for thought, things to think about. I really enjoyed that. I appreciate your time. Scott, did you have anything else for Donnie?
No, that was it. Just thanks again. It was great to catch up. I haven't seen you in a long time, and we'll definitely have you on again.
Sounds good. Well, we'll see what the feedback is from this one. Make sure people are really as interested about insurance as I am. But like I said, I'm revved up and always excited to talk about it. And I'm sure I'll have a few more stories for you next time.
You got me fired up for insurance, man. So I'm fired up, ready to go.
Yeah.
Okay, nice. Well, that's it for today. That's it for Think Heart for this week. And we'll see everybody next week.